Hey, welcome back to the podcast. I know it's a little unusual, our third day in a row of a podcast. Usually we spread them out a little bit just because, frankly, there's not enough time in the day to do a podcast every day. But there's a lot of stuff going on right now, and it's rather interesting, and I think it's important that we get it out to you as the market seems to be changing on a daily basis. But the market pretty much erased all of yesterday's losses in one day. So the sell in May and go away lasted one day, at least for now. Well, the Dow Jones finished up 130 points. If you recall, it was down 138 yesterday. NASDAQ was up 41, and the Russell 2000 was up 1.7. We talked about the weakness in the Russell yesterday, how strongly down it was. I guess that would mean it was weak. How strongly down? Yeah, it's weak. And the S&P was up 1%, but the Russell came back pretty strong today and actually led the way back up. So we'll get into that in just a minute. But it all started really this morning. Futures were up pretty good before the stock market opened. And then, of course, we had the initial jobless claims coming at 324,000, which was better than the expected number of around 346, I believe it was. So that was a stronger number, and it's actually, I think, the lowest claims we've seen since 2008. And so in the last few weeks, we've been getting some very mediocre economic reports, things that were worse, a little worse than expected. And, of course, the Fed came out yesterday and said, hey, if things get worse, we'll be there for you. And so maybe the market found some solace in that. Or maybe they're prepping us for a very bad non-farm payrolls report, which is coming out in the morning. Because if that comes in really poorly, maybe the stock market still goes up because the Fed's there, right? Good news is good news, and bad news is good news, apparently, in this market. So the futures were up, and it was pretty much a strong day throughout the day. But you can see here that pretty much got back what it had lost yesterday. And so we're back up at these old highs, and it did have a little struggle. If you look at the 5-minute picture, and we'll go back a couple of days here, and you can see that right in here, we've kind of been reaching this level. We'll call it around, so let's just say 1,600. We'll round up. It's been having a little bit of trouble in there, so let's see if the market can burst on through, or does it fall back down and go down to 1,580 or so. The interesting thing is the Russell, and we spent some time talking about the Russell 2000 yesterday, and I've got it kind of zoomed in here, but you can see that it's still making lower highs. In fact, even though it was the leader on the day today, it didn't make back where it was just a couple of days ago. And so, again, let's see if that breaks this trend, because right now this would suggest that it could head back down, at least to this 100-day moving average. And, of course, it's been going back and forth on the 50-day moving average, which a lot of people use. But this could fall back down. But I will tell you from, again, looking at the internals yesterday, looking at them today was a stronger up day than yesterday was a down day, if that makes any sense. In other words, yesterday, I told you on the podcast that it looked like kind of buyers on strike. They didn't seem to be a lot of intense selling for a day where the Dow was down 138. You didn't really have that intense selling. The volatility wasn't really spiking that much. And so it wasn't really that horrible of a day, but it certainly looked like something that could start a downtrend. You come back today, and it's actually a stronger up day with a little more demand. Now, the volume was a little weaker and wasn't great, but again, we could have said that pretty much every day since 2009, that the volume wasn't as good as it should be or could be. We did see a little rotation today out of things like staples and utilities into some of the stronger areas. Energy was up today, and in fact, I was just curious about something, and we did our crack research team did a little bit of research, and today something happened that has only happened 8 other times, and today was the 8th time, so 7 other times since almost 30 years ago. And what was it? I'll give you exactly 2 seconds to figure it out. Okay, time's up. I was curious. I was watching the stock market today, and as the market was up over 100, convincingly, I was watching the bond market. I was watching gold. I was watching the dollar, crude, all these different things that typically some of them will move opposite of one another. For example, remember, it seemed like the stock market would only go up in the last few years when the dollar was going down. And now what we have is the dollar, and this isn't updated through today, but the dollar, has been in the last few months here, as you can see, has been actually going up. Now, it had been going down the last few days, but it had a strong move in February and March. Meanwhile, the stock market was going along with it. Gold, on the other hand, had been going down. The yen was going down. The Japanese stock market was going up. It's this yin and yang. When certain markets go down, certain markets go up. But today, gold was up, crude was up, Treasury yields were down, meaning bonds were up, the S&P was up, and the dollar was up. So even when the stock market was going up, money wasn't coming out of bonds like you thought it would. It did early in the day, but Treasuries actually finished with a gain on the day. Treasury yields were actually down on the day to 1.63. And so I had Casey, my analyst in the office. I said, hey, go to your fancy Bloomberg machine there and pull up a little research and find out how often does this happen where you see oil up, gold up, bonds up, stocks up, and the dollar up. How often does that happen? And he came back about an hour later and he said, it happens, actually it's happened fairly frequently, enough to where it doesn't jump out at you. He said, but what's really interesting is that only 7 times prior to today have we seen those 5 things up as much as they were up. In other words, they were over 1 standard deviation away from their mean. So basically, not only was the stock market up, it was up much stronger than normal. The dollar was up much stronger than normal, and I'm simplifying it for you non-mathematicians. Gold was up more than normal, and oil was up more than normal. And so this was one of the strongest days where you saw money pile into pretty much everything. Bonds, stocks, gold, the dollar. Those things just don't typically move together. And when they do, they really don't move as much as they did. So this was a really interesting day. The other times that this has happened has been June of 1986, October of 1986, once in 1992 in September, January of 1999, October of 2008, January of 2009, November of 2009, and May of 2013. Now, I would show you all those dates, and maybe we could analyze a little further, but knowing these time frames, and when you're in this business, you know years, you identify years by what different assets were doing during those years. I know 1995, I know 1998, I know 2000. I just identify years with what those markets were doing. And as I look at these different years, 86, 92, 99, 08, 09, and now 2013, they don't have anything in common. So I'm giving you some interesting information, but it doesn't glean anything about what the next few weeks hold, because some of those times were during a financial crisis, some were during a rebound, and some were during just a lethargic market. So it doesn't really glean anything, but it's very interesting how much money flowed into all these different asset classes at the same time. Very, very strange. And that's one thing that you have to do if you're going to be successful, is adapt to a changing market. Because, again, if you're somebody that says, well, if the dollar is going down, that means I'm free to buy stocks. Well, does that mean if the dollar is going up, you have to sell stocks? Because if you've been doing that, you've been wrong. How about if the stock market's going up, then I must have to sell my U.S. Treasuries? Not lately. So you have to see what's going on and see, are these trends changing? And it seems like something is going on that's let's call it out of the norm, and we have to see if that's a pattern. And if it is, then we need to adapt some things. But overall, getting back to the general stock market, getting back to this Russell 2000, again, I feel like there's a tug of war going on. And so if you lightened up yesterday and came back today and thought, boy, I shouldn't have done that, I should have bought more on the dip, I'd be a little patient here, because while the market probably will go higher, and as we talked about, if anything, this is a short-term correction developing yesterday when you did on the podcast, just be patient a little bit, because there's certainly a tug of war going on, I think, overall, when we look at what's going on with the stock market. I mean, if you look at the highs that the Russell 2000 has put in here, and you had these down, 3 or 4 down days, 3 or 4 up days, 3 or 4 down days, 3 or 4 up days. Now we've had a big down day, a big up day. this is all, I mean, you have to ask yourself at these high levels, do I want to lean towards being heavily invested, or do I want to lean towards more in the middle? And I'm choosing to lean a little more in the middle by taking some profits in the last few days. And it still makes a lot of sense to me. Now, because I want to be bullish for people that are out of work and for our economy and for lots of reasons, I want to be bullish. I want things to get better. I hope that the stock market does break out here. But I have a feeling that it's not going to be just that easy, that we're gyrating back and forth here a little bit, and it's kind of this tug of war that's going on. Because remember that there have been days where the risk-on type assets have been lagging considerably. And on the flip side, there's been days where they've led like today. And so you're getting a lot of inconsistency. And so again, you have to decide, do you want to err on the side of caution during those times, or do you want to err on the side of being aggressive? And right now, I would say the market's trying to stall out at around 1,600, but it was highly encouraging that one down day and the market erased all those down points in one day. So that's the encouraging part. And again, just don't overdo things, because if you sold yesterday and then you went in and bought, this gap up at the open today, and then tomorrow it's a down day after perhaps a bad jobs number, you need to be careful about over trading as well. And so again, as we've talked about, have a system in place. Now, some of the top sectors today, the home builders up about 2%, did very well. Oil and gas, of course, I think oil's up over $3 or 3% today. Yeah, it was up about 3.25% today, so it had a big day. So, of course, oil and gas stocks did very well. But again, just like small caps, kind of in this downtrend a little bit, and so that's something that needs to break. Biotech stocks, those have been pretty strong, and you can see that they've given back a little bit, but up at the top, they're still doing very well. It wasn't all risk on. I mean, pharmaceutical stocks did well today, up about 1.5%, and even the stuff that was weak, it wasn't that it was down a lot, it just didn't go up with the market. Things like utilities we talked about. And again, volatility continues to come back in here a little bit, and it's just not a major concern right now. And again, it might be, and I'm getting some, I have to tell you, I'm getting some negative signals from when I look at some of these charts on a monthly picture, some things that set up coincidentally in October, or should we say September of 1987, are setting up now, but I wouldn't put too much stock into that. I'm just saying that just be careful and don't overdo anything. But no, I do not believe a stock market crash is imminent. But if it does happen, maybe you heard it here first. But Treasury yields, as we talked about, again, continuing to fall, meaning if you're in Treasuries, which I do own some Treasuries, they are going up in price right now. And again, you wouldn't think that with the stock market doing what it is doing. And so that still, I mentioned this yesterday, that tells me that money's coming into the market. It's not selling bonds. It's fresh, new money. And that's encouraging. And that's what we want if you're long. So that's a quick wrap today. Again, I really didn't do any trading today. As I mentioned last couple of days, locked in a few profits. And but again, I want to see how the market reacts to this jobs report. It may be a market mover. It may not. Who knows? But overall, going into the weekend, let's see how the market reacts and see if we can finally break through to the upside. For me, I've shifted back the risk a little bit. All right, have a wonderful day, and we will talk to you soon.